For this story, let's take a look at Australia. Australian Prime Minister Gillard on Monday won a resounding victory in a leadership ballot against Kevin Rudd, the party leader she deposed 2 years earlier before she takes office. Gillard defeated Rudd by a resounding 71 votes to 31 in a ballot of ruling Labour Party lawmakers, official Chris Hayes said after the meeting in Sydney. Supporters of both candidates have expected Rudd to gain around a third of the votes. Rudd had vowed if he lost the ballot, he would remain in politics at least until elections due next year and said he will not challenge her leadership again. Gillard called for the ballot last week to confirm her authority after simmering leadership tensions that have destabilized the government for months led to Rudd quitting as foreign minister while visiting Washington, D.C. A narrow victory would have left her exposed to a second challenge if Labour continues to trail the Conservative opposition coalition in opinion polls. Gillard was Deputy Prime Minister 2 years ago when she made a snap challenge to Rudd's leadership. When Rudd discovered how few lawmakers were prepared to support him at the time, he did not contest the ballot and Gillard became the Prime Minister without a vote.
With the tensions surrounding Iran, the concerns of an oil shock is surfacing, particularly in Korea, who imports most of its oil needs. Korea's benchmark Dubai crude jumped to $121.57 a barrel, the highest since August 2008 on Singapore's spot market on Friday. Brent crude, a global yardstick, touched a 9-month high of $125 a barrel. Korea, the world's fifth largest crude buyer, imports almost all of its oil needs. Finance Minister Ballot said rising fuel prices are threatening to raise consumer prices and jeopardize the central bank's 3.2% inflation target for 2012. The finance minister said oil prices have an extensive impact on the Korean economy. He added that one of the government's biggest priorities is to contain inflation as much as possible with the hope to reach the 3.2% target or lower. Retail prices of gasoline hit an all-time high of 1,993.82 won per liter on Friday, on the back of growing tensions between Iran and the West, as well as supply disruptions in countries like Syria, Yemen, and Sudan. Among the hardest hit are airlines and shipping businesses, which are striving to keep engines clean to boost performance and maintain a fuel-efficient speed. Fuel accounts for more than 30% for airlines and 20% for shipping businesses of their budgets now.
Bank of Japan's Governor Masaaki Shirakawa, inflation's goal is succeeding where record intervention failed, as the yen heads for the steepest monthly drop in 2 years. The currency plunged to a 7-month low after the Bank of Japan, which has struggled for more than a decade against deflation, said on February 14 it aimed for 1% annual gains in consumer prices and would add 10 trillion yen to the economy. Traders are paying record premiums for options to buy the dollar against the yen for 3, 6, and 12 months. Bullish bets on Japan's currencies have fallen 70% from January the 31st. Shirakawa needs a weaker yen to help Japan's exports its way out of a recession made deeper by last year's earthquake and the worst nuclear crisis in a generation. Oil and gas imports to replace lost capacity have reversed trade surpluses that made the currency a refuge in a slowing global economy. A strategist at UBS AG in Singapore said prospects of currently higher inflation are driving it down. UBS cut its year-end yen projection to 85 per dollar from 80, saying the Bank of Japan's inflation goal will help reinforce expectations that policy will remain easier for longer, a note from the brokerage said on February the 22nd. Japan has posted an annual current account surplus, the broadest measure of trade since at least 1985, according to the Ministry of Finance, turning the nation into the world's largest creditor. The largest data from the ministry show it had 251.5 trillion yen in net assets overseas at the end of 2010, which is closely equivalent to the size of Germany's annual economic output in dollar terms. The Trade Ministry said in November that the current account may slide into deficit from the middle of this decade, and Japan posted a record of 1.48 trillion yen deficit, a narrow measure, last month. The currency climbed against all 16 most traded counterparts in 2011 for a second straight year. Even after the recent decline, the yen is 17% stronger than its 5-year average. It'll be at 77 by the end of March, according to the median estimate of currency analysts surveyed by Bloomberg.
Asian stocks are swung between gains and losses after it was the longest rally in 2 years. Risk concern higher energy costs will weigh on economic growth, and as the yen's decline boosted the outlook for Japanese exporters. German lawmakers voted on a second Greek rescue package today, and European Union heads of government hold a summit on March 1. The 1st and the 2nd in Brussels. The world economy is not out of the danger zone amid fragile financial system, high public and private debt, and rising oil prices, International Monetary Fund Managing Director Christine Lagarde said in a statement after the G20 meeting. Korean Airlines, the nation's biggest carrier by market value, sank 3.2% in Seoul. Newcrest Mining dropped 3% in Sydney after JP Morgan Chase & Co. cut its rating on the Australia's largest gold explorer. Sony gained 3.3% as the yen fell to a 9-month low against the dollar. The MSCI Asia Pacific Index rose less than 0.1% to 127.99 as of 10:49 a.m. in Tokyo, after falling as much as 0.5%. The index advanced for a 10th week last week, its longest run of gains since data started being collected in 1988. Shares rose amid the confidence that China will ease monetary policy and cites the U.S. economy is improving. Japan's Nikkei 225 stock average rose 0.5% after the yen touched 81.67 per dollar to date, the lowest level since May on the 31st. A weaker yen boosts exporters' overseas earnings when repatriated. Australia's S&P ASX 200 index slid 0.7%. Australian Prime Minister Gillard defeated former leader Kevin Rudd in a leadership ballot, leaving her to unite the ruling Labour Party and revive poll ratings before elections due in 2013. Singapore's Straits Times Index fell 0.2%. South Korea's Kospi Index retreated 1.5%. Inflation may exceed the government's target as oil price rise, Finance Minister Baghdad Jawan said last week in Mexico City, where leaders from the group of 20 nations met. Crude for April delivery slid as much as 0.4% today. Oil gained 1.8% to $109.77 a barrel in New York on February the 24th, advancing for a 7th day, the longest stretch since January 2010.
Right now, we'll be interviewing Sutapa Amornvivat, the Chief Economist, Economic Intelligence Center of Siam Commercial Bank. Good afternoon, Kun Sutapa.
สวัสดีค่ะ
Good afternoon.
Well, Kun Sutapa, the Thai baht was trading at 30.38 earlier this morning, which was approaching a 5-month high. Why do foreign investors still favor the Thai assets?
Well, it's certainly coming from the good news that happened in the Europe second bailout that came out last week, and that switched the risk appetite on towards the higher asset in Asia, and then Thailand's part of the emerging market sentiment.
All right. Well, in the first 2 months, Kun Sutapa, foreign investors have bought 200 billion baht of Thai bonds. And why are Thai bonds so attractive?
Sorry again, I didn't hear the first question.
Okay, why are Thai bonds so attractive as the foreign investor have bought 200 billion baht of Thai bonds?
Well, first of all, definitely it's the same issue as the other assets. Is the return is definitely higher in the Asian market, and Thai bonds definitely show that opportunity. And also, we also see the continuous strengthening of the baht, and that's show the sentiment that moving towards this region.
I see.
However, we see that as a temporary in some way, because that's a risk-on, risk-off environment right now. So once there's a good news and the risk is restored, the risk appetite is restored, then people will move the money back to emerging market region. But once the bad news comes, then people would like to hold cash as you know, as the U.S. asset as close as cash is the treasury bonds. So they will move the money back out of the emerging market.
I see. So, Khun Sutapa, do you think that the Bank of Thailand will continue to manage the baht in such a way to prop up the Thai exports, which have been hit badly by last year's floods?
We certainly have seen the effort to sterilize the sterilization of the capital flow that coming in the last 2 months. But however, this is mainly to manage the volatility in the market. Also, on the flip side, though, with the strengthening of the baht, we can see that given that Thailand at this point having to invest a lot on the machinery and given the oil price rise in the last few weeks, I think the baht strengthening would actually help the economy for the short-term imports.
And are you confident that Thailand will recover from the flood this year? And is an inflation a source of concern?
So far, the inflation would definitely be the point of concern. However, it will come from the supply shock, if anything. So, given the supply shock, it's unlikely that the Bank of Thailand would actually using the interest rate, the policy rate, to fight the inflation.
I see, Khun Sutapa. So, what is SCB's projection of the Thai GDP?
We're looking to the rest of 2012 at 4.7%.
4.7%.
Okay, well, thank you for
and that's already
joining us.
factored in the rising oil price.
All right.
Okay.
Thank you for joining our program today, Khun Sutapa.
Thank you for having me.
Goodbye, ครับ